Hi folks, welcome back. This is the first video for September 2021. I did not do anything yesterday except for further hurt myself. So apparently I've done something really bad to my back. I think I may have done some disc damage. So I'm going to give it a few more days resting, but if it doesn't improve, I'm going to have to go see a doctor, and hopefully they don't give me the news I'm dreading. So looking at the dollar index, this is our daily chart, and we finally had a continuation lower. So on Tuesday I was mentioning how we did sweep below here, but ultimately we're looking towards a run in here. And yesterday during Wednesday's trading, we went one more time back below the short-term low, almost completely closing in this buy-side imbalance, sell-side inefficiency. And then today, an overshot that imbalance there. So the sell-side liquidity resting here, then volume imbalance, and then in here. We're watching for that in the dollar index. All right, keeping that sell-side liquidity pool in sight on the hourly chart. You can see we did trade down below that old low, which is the lighter level here on the daily chart. That old low is that discount low of the buy-side imbalance, sell-side inefficiency. We've traded below the old low again in here, and then right back up into this small little fair value gap right there, and the last up close candles in here, one consecutive bearish order block. So we have optimal trade entry here, rebalance this small little fair value gap, and then displacement. We also have the breaker, which is high, low, higher high, down close candle. We trade up into that as well. Then sells off, immediate rebalance on this candle, and then another run lower below the discount low of the buy-side imbalance on the daily chart. A little bit of a range left still. We'll be looking for that over the coming days and weeks for dollar index. 15-minute time frame, you can see the optimal trade entry. High of the day, trades lower, and it runs right back up in during the New York session. Optimal trade entry, and runs to the discount low of the buy-side imbalance, sell-side inefficiency. Rebalances to the fair value gap, consequent encouragement here, and trades lower. Change in the state of delivery, the opening price here, down to this low. You get optimal trade entry with the fair value gap, New York session sell-off. Institutional order flow entry drill here, and attacks the low again. So overall, nice little delivery on sell side today on dollar index. Euro dollar, as I mentioned, we are looking for potential run above here. Low resistance liquidity run signature, higher low to the right. And again, this area right in here has my attention. Might not get up there, but for now it is holding my attention if we can get above this high. And it certainly looks like we're trying to make an attempt to do that. And we have the breaker here. So I mentioned if we would trade above this and come back down into it, it would act as a breaker. And it has done so on Wednesday and today's trading on Thursday. So the buy-side liquidity is the next draw on liquidity, 119.10, 119.15 area. And market maker buy model is what's underway here. Hourly chart on euro dollar, you can see how we did trade down into the bullish breaker on the daily chart, which is that blue line. And optimal trade entry low, high, hits it here, starts to rally. Consolidation, fair value gap, bullish order block, hits it here, and rallies. 15-minute time frame, keeping the daily buy-side liquidity pool in sight on the lower time frame. I usually don't like to keep these far off targets on the lower time frame, but just for the sake of clarity as to what I'm looking for, that's where we're aiming. So consolidation optimal trade entry, rallies, comes back down into the last down close candles here, all consecutive, 1, 2, 3, 4. Hammers it right there. Rallies, fair value gap, bullish order block, London close continuation, and rallies for a run into a higher high for buy sell liquidity. All right, here's the pound dollar daily chart. And as I mentioned, this one is still in a consolidation holding pattern. So we do have this little bit of an imbalance, and that's fine. That's the extent of what I was looking for at the most. The better buy is in euro because the underlying market structure is clear. It's cleaner to read. And now since we've completely balanced this, the only thing that would make sense as a run would be these highs in here. And it would need to accelerate through that convincingly for me to think that we're going up into this area for this fair value gap and the buy side liquidity. I'm not saying that it can't do that, but right now I just think the better play is on euro dollar, as long as dollar remains weak. And I'm keeping the charts pretty naked on pound because I don't want to entice anything, because I'm personally not interested in this pair at the moment. So we had relative equal highs in here. We rallied through on the 1st of September. Fair value gap, we come back down in, leave a small portion in here. I like that because this acts as a breakaway gap. And we rallied through. Short-term high. I saw liquidity pool right here is targeted for today, 2nd of September 2021. And we're consolidating in here now. All right, and pound dollar 15-minute time frame, you can see that we had a nice optimal trade entry in London session, and another one here. Order block hits it, fair value gap filled in, rallies, and then we have a drop back down into optimal trade entry with the bullish order block there for the New York session. Then a nice extrapolation on the upside. So we're looking for, again, evidence to support whether this wants to continue higher. It does look like euro dollar still is the cleaner of the two pairs, so I'm focusing primarily on that pair versus this pair, and then we'll follow up tomorrow and see what we get for non-farm payroll. Again, don't be enticed to do anything tomorrow, just watch it. I'm thinking that euro dollar may get that push up on the non-farm payroll news, and that would be a nice delivery using the manipulation and the current sentiment. So, I don't think it would be favorable for them to pull it back deeply on non-farm payroll and leave the buy-side liquidity pool for the daily chart. If anything, if there's any pullback, I think it should be contained in a small range and just give like a lackluster non-farm payroll and then continue, I guess, on Sunday of next week going into Monday and Tuesday's trading, and then aiming for that buy-side liquidity pool for euro. Cable, again, I'm just going to keep it, I don't know. So there you go. I'm giving myself permission, just like I teach you to give yourself permission. If you don't see it, you don't see it. You may not agree with my analysis here. My analysis is telling me don't touch this one. Okay, so that's going to be it. I appreciate you guys working with me. I do not like being in this position where I can't deliver like I want to. I just am hurting. So again, I'll touch base with you tomorrow. It may not be around this time. It may actually be a later in the evening, depending upon how well I feel tomorrow. So don't expect, the weekend commentary to be about this time tomorrow. It can be. I'm aiming for it, but it may be later on in the evening. Until I talk to you then, be safe.